This is a massive industrial diesel engine. Its manufacturer, Kirloskar Oil Engines, operates in the heavy, unglamorous world of traditional machinery. This chart tracks the company's performance over the last 12 months. That steep upward curve represents an 87% surge. These zones, labeled weekly institution aggregation, indicate blocks of calculated, steady accumulation by major funds, rather than short-term price volatility. This creates a disconnect. A traditional manufacturing company is behaving like a high-growth startup, suggesting that financial institutions have identified a catalyst the public has yet to notice. This legacy stretches back to 1946. For decades, Kirloskar has been defined by its history on the industrial shop floor. Because their primary output was agricultural pumps and standard backup generators, the market categorized them as a slow-growth industrial relic. Capital has spent the last few years chasing the intangible: artificial intelligence models, cloud software, and digital platforms. The intense market focus on software created a window where Kirloskar's structural pivot could gain momentum while remaining overlooked by most growth-oriented investors. The catalyst for this pivot is located here. The rapid expansion of AI is driving a record-speed build-out of global data centers. These digital facilities share a critical physical requirement. They cannot tolerate even a fraction of a second of power loss without risking massive data corruption. This creates a proxy play. Instead of guessing which AI model will win, investors can buy the physical bottleneck that every single one of them relies on to stay online. That bottleneck is continuous power, and Kirloskar manufactures the heavy-duty generator sets designed to handle the massive electrical loads of modern data hubs. By dominating this specific niche, the company has positioned itself as the mandatory physical safety net for the modern digital economy. This FY26 scorecard shows these data center tailwinds translating into hard data. Revenue reached 7,700 crore, a 21% increase over the previous year. Efficiency at scale pushed profit after tax up 18% to 562 crore. Momentum is accelerating, with Q4 alone generating 2,116 crore, the highest earning single quarter in the company's history. They achieved these records while maintaining an expanding 18% EBITDA margin. These metrics characterize the stock's recent surge as the predictable mathematical output of a consistent, highly profitable compounder. Institutional capital is also responding to the scale of Kirloskar's manufacturing diversification. Their footprint includes Indian Navy marine diesel projects and an export network spanning 70-plus countries. Management targets $2 billion in revenue by FY30, growing the company 2.5 times. They're targeting this with zero debt stress and 552 crore in net cash. Combining infrastructure demand with defense contracts and a clean balance sheet creates a defensive growth profile that minimizes risk for institutional investors. The most reliable market opportunities often hide in the essential physical infrastructure that makes the digital world possible. While the crowd chases overvalued software names, sophisticated capital quietly accumulates the companies selling the digital picks and shovels. It's the story of an old economy company riding massive new economy tailwinds. Follow the channel to discover data-driven narratives before the crowd catches on. This content is for educational purposes only, not SEBI registered, not investment advice.